It's been a while. We did a chat video. Today we're going to be looking at the market. Let's see what's been going on. Last week was bloody in the market. Last week was very very bloody in the market. A lot of people got liquidated. Many people saw what gold did in the market last week. A lot of institutions and hedge funds. A lot of money was liquidated. I don't really trade gold, but a lot of people trade gold. Look at gold chart. You know, people has been buying and buying and buying, and a lot of people are not careful to know that eventually, look at what gold has been doing from here. This is 4 hour chart all the way here, and you know that a lot of people are. You just get greedy, you get caught up. The market is majorly doing two things. The market is creating imbalances and balancing them and hunting liquidity. That's what the forex market is all about. It has gone all the way from here all the way to here. Somehow the market must correct. A lot of people, even here, you kept buying and holding and buying. It's not rocket science. It has to drop. This drop just has to happen. You understand? That's for people that trade gold anyway. So I don't trade gold. What I want us to look at is USD JPY. You know that's my baby. I love USD JPY. Is my go-to pair all the time. Now let's do a top-down analysis on USD JPY. Let's start from the weekly. Now from here we can see this is higher low, higher high, higher low. So we're expecting it to go and make a higher high, basically. Then again, if you look here on the weekly, you can see a head and shoulder, left shoulder, head, right shoulder, then maybe forming another shoulder again. But this here is a head and shoulder pattern. So if you see a pattern on the weekly, you don't joke with it. You take it very, very seriously. Whenever you see any pattern on the weekly, you don't joke with it. You're very careful what you're trading, how you are, what you're doing, and all of that. So whenever you see a head and shoulder on the weekly, or you see a double top or double bottom, you take it very seriously. Let's go to the daily chart. Now, I've been trading this market all the way from here. I remember when this range happened. I made a video then when it broke out of this range from here, pulled back. This is October last year. I remember this trade. I entered somewhere here and I exited around here. I made a lot of money here on this market move. So you have a higher high, higher low, higher high, higher low, higher high. Then you have a higher low here. Now look at all of this. You see why I always stress that people should learn market structure. Market structure is the spine of the market. If you don't know market structure, you don't know anything. You're just wasting your money. Now look at all of this. People see this as lower high. Some people see this as a maybe higher low, higher high, higher low. But this high has not been broken. It was broken here. This is where you have your higher high. Now that means this is the previous low. This is the structural low below here. Then last week, this market broke this low. I took some losses here because I was hoping to catch this counter move, but it kept dropping. So I left the market. Now it's beginning to pull back. I'm seeing that this market will close this gap. It has to close this gap here. So it will likely come up here before I start dropping again. So I'm looking to wait till this gap is closed. Then I begin to look at price action on 4 hours. I trade the 4 hour trend. I begin to look at price action here. When it closes this gap and it comes around here, if I begin to see that the buyers lose momentum and sellers begin to come into the market, then I'll look at entering the market. But for now, I'm sitting on my hands because the market is very, very dicey. A lot of things are going on right now in the market. Be safe there, guys. See you on the next one.